Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and today we're trading the 15-minute ORB strategy. I'm going to give you a quick look at the process, and then we're going to go over the US 30, US 500, US 100, and US 2000. Now is the time to be looking at the 15-minute ORB. The first 30 minutes of the session is about dead. We've got some interesting rotation. We've got about 15 minutes before we're going to have to make a trade. So I'm going to give you the process, what you need to be looking at, and then we're going to identify our ranges and our key levels, and we're going to be in great shape here. So we do have a little bit of time before we actually have to place a trade. A lot going on in the markets. I may do a news brief a little bit later today and just talk news, but essentially we missed NFP again because of the government shutdown. That's a major problem. We can just do it right now real quick. The shutdown means another missed jobs report. Here's what you need to understand. Here's what it probably would have shown. This is a major media outlet basically saying that the Dow Jones did a survey of probably anonymous economists, and they all said that the NFP was going to contract by 60,000 and the unemployment rate was going to spike to 4.5%. That is just ridiculous. They don't know that. That's an absolute garbage reading. I'm going to leave it for right now because we need to trade, but that's some of the things that are weighing on this market. The government shutdown is beginning to be a big deal. Airline closures. We've also got the Supreme Court possibly judging against the tariffs from the Trump administration. There's a lot going on here. It almost needs its own stream just to unpack the news. So for right now, let's trade the action. I know that's why everybody's here. We're going to go ahead and go over the ORB strategy. Remember, if you want to cover any of these, if you want to trade any of these types of strategies or any of these assets that we look at, head on over to Switch Markets. They'll get you up and rolling with a free demo account. You'll have access, once you fund, you'll have access to Algo Builder. You'll have access to Pine Connector, a lot of different things there that can get you on the good foot and in the market with it from a position of strength. All right, good to see everybody back in the room. Tina Howe, good to see you, Tina. Great questions yesterday from Tina in the private chat. I'm going to do my best to answer some of those today. I think that we're going to talk about our entry points a little bit towards the end of the stream because we've got time there, but I want to get these trades locked and loaded and ready to go. Let's see, SV, good to see SV. Yeah, it's blood on the spreadsheets. Yeah, right now it's a challenge. Pundits say a fake crash, but a repo has to be repackaged and sold first 18 months out. That's a long conversation, SV. We might have to save that for another time. Ahmed expecting to out of the long Bitcoin position, I guess, soon. We're going to take a look at Bitcoin here as well towards the end of the stream. I'm hearing you. Paka, good to see you. Paka, T. Marina, Tina Jing, good to see you. Andrea Garwal, good to see you, Andrea. Always a pleasure. Lita and Tuku. All right, our How to Trade communities here and also out in YouTube land. All right, let's trade the orb. Okay, remember, this is a strategy. It's available over on the How to Trade YouTube channel. If you want to watch the full video, go ahead and do so. This is a relatively simple strategy, but we are going to get it up and get it going. So what are we doing here? We're trading the open. Now, we're not going to trade the close. There's a different strategy for trading closes. It's called late day pivots. We're going to get into that down the line. That is a very difficult thing to do. I've had mixed results, but I do like trading the opens. So remember, today we're going to be focusing on right on that New York Open. That's going to be absolutely key. We're looking at the New York Open, 9:30 a.m. Eastern. It happened about 32 minutes ago. So we've got our ranges pretty much set that we're going to be working from. The two candle orb setup. This is as easy as opening ranges get. There's a lot of different ways to do this. A lot of folks use oscillators that overlap and they identify a range according to volume profiles from the previous session. You don't need to do that for right now. Believe me, it gets too difficult too quickly. You can research all the different orb types if you want. This is the most basic, and this is the one I like. I like easy. Easy is good. Easy is good. I like to eat food I can pronounce, right? Easy is good. Of course, I'm from rural Montana, so that's a little bit different. I guess. I have different tastes in that regard. First two candles after the open. Any time frame. Today we're going to use the 15-minute time frame. Honestly, that's as small as I feel comfortable going. I love 30, but 30, we're going to be here all day trying to get our trade set up. So 15 minutes is what we're going to look at. It's a pretty good illustrative tool, and you can have some success with a 15-minute orb. Playing a breakout to a key level, very important. Our key levels are very important. I'm going to go over those in a second. Ideal for equities, commodities, and maybe applied to Forex. Today, we're going to be looking at equities. We're going to be looking at the equities markets. We've got 4 of them on tap for us. The big U.S. indices are what we're going to target right now. Okay, so what's our process? Very simple. This is how you can approach your orb each and every day. Number one, identify the markets you're going to trade. I was asked yesterday, Shane, if you were going to trade an orb, which one would you start with? I said US 500. US 500 is what I would start with. US 30 can be thin. US 100 is incredibly volatile. And the US 2000 has a mind of its own. I like the US 500. It's a nice broad-based look at US equities. I actually just made a video on the S&P 500. I don't know when it's coming out, but it'll be out at some point, and it'll be on our Switch Markets YouTube channel. The next thing you're going to do is you're going to draw your key levels. I'm going to show you exactly how to do that and the ones that you need to focus on before the session. You draw these before your orb sets up. That way you're ready to rock and roll when the time comes. And then we mark our orb. We look at our first two candles. I like to draw a rectangle around them just to show exactly where that range is and what it looks like with regards to current price action. And then we build our trade. We set our entry points, we set our stop losses, and our profit targets. That's it. That's your process for trading the opening range breakout. Don't make it any harder than it has to be. That is it. Identify your markets, find your key levels, mark your orb, and build the trade. That's it. All right, let's do it. So here we go. Let's get started here with the US 30. As you can see, as SV said, yeah, the spreadsheets are blood red. I mean, we are just bleeding again for the second straight session. So what do we have here? The first thing that we want to do is identify our markets. Today, we're going with the US 30, the US 500, the US 100, and the US 2000. These are CFD markets. I'm choosing CFDs instead of futures today because most of our traders are located in international jurisdictions. So CFD trading is legal here in the United States. If you want to follow along, all you're going to do is use a futures contract. So that's going to be, what is that going to be? The E-mini Dow right there, E-mini S&P 500, E-mini NASDAQ, and E-mini Russell. Very simple, very, very easy. Okay, here we go. So the next thing we do is we're going to draw our key levels. I already have these drawn. Now, what I'm looking for, especially for a U.S. Open, is I want to mark my overnight high, all right, my session lows going into my orb. The session low, that's essentially going to be your overnight low. It's not our session low right now. We've already opened. Overnight high, overnight low. I'm going to call it the session low for right now. Yesterday's low is in play. So there's 4 things you need to know. Now, there's a lot more weeklies and monthlies, and we'll talk about that some other time. But for your purposes right this minute, you need to know yesterday's high, yesterday's low. Yesterday's session's high, yesterday's session's low. Okay? You need to know your overnight high and your overnight low. Now, that is what the high and the low is before the open. Remember, the open is the key. Why are we trading the open? Very simple. Take a look at our volume profile at the bottom of the chart. There it is. Why are we trading right now? Because volume's up. Look at what the 15-minute volume was all night on this US 30, and then right there, bang. Okay, we're rocking and rolling. We got something. We got a game. Everybody's trading it. Now is the time we want to make our decision because that volatility is coming from participation. And when there's traders in the market, it's going to move. Okay, that's what we have to have happen. It's got to move. So right now, take a look at our key levels on this US 30. What has happened? We are trading the bottom, essentially the bottom quartile. We've already broken beneath yesterday's low, all right? And now we broke beneath our overnight low as well. So the trend clearly is down. Let's draw our orbs. We've got our key levels. Let's draw our orbs. So right there it is. The first two bars are our two-bar orb, 15-minute chart. Boom. One, there's your open, bang, bang. Right there. Those two bars, that's our orb. That's our opening range breakout. Now, if you get lost and you can't find your opening range breakout easily, look at the volumes. Boom, boom. Volume spikes on the open. Those are our bars. Okay, let's draw our orb. I love the rectangle. To me, it makes it very easy. Very, very simple. So what are we doing here? We're looking at that high right there of our B period. That's a conversation for another time. That's our orb. All right. Now we're trading beneath yesterday's low, and we're trading beneath the session low. What does that mean? Right now, we're at a key zone. Key zone. We're either going to reverse back into the daily range or we're going to trend hard down. Interesting. I love the way this is setting up. This is pretty exciting stuff to me. When you've been in the market a while, absolutely, you get excited by this stuff. US 500, a lot different than the US 100, isn't it? Profile is essentially the same. Overnight highs up here. Yesterday's low, we broke that earlier today. And then also your session low is a real nice, like you'd call that a liquidity grab. I love the compression here, though. Compression, break. All right, break right there on your open. So what's this orb going to look like? There it is. There's your orb. US 100, what does it look like? A little more dramatic, isn't it? Yesterday's low and the session low is spread way out compared to some of the other ones, right? All right. Let's draw our orb. There it is. US 2000. Uh-oh. You guys are starting to understand that one equities isn't necessarily another equities. Steve Francis, good to see you. Understand that even though stocks are correlated, typically a stock market rally, a rising tide, rises all ships, right? Or whatever the saying is. Bottom line, they all usually run together, but they don't run the same way. That's why the first thing you have to do is choose your market. Very important. Very, very important. And it all has to do with your risk appetite. NASDAQ and Russell move, sort of have minds of their own. US 500 and Dow, yeah, they're not bad. US 500 is the deepest. The Dow can be thin. There's our orb. Okay. The question now really becomes on all of these, do we want to be short or do we want to be long? You could see a trend day starting here. You could see the potential for a major sell-off, and that's what these orbs are probably going to give us an opportunity to do, maybe sell. But also, if we wanted to play a buyback into those overnight losses, you could probably play a buy. That's why I like this. We had a pretty good overnight range. We had bearish pressure in the market yesterday. We've traded beneath those lows. We've got an opportunity to extend south, or we have an opportunity maybe to build off of those key levels and rotate back up into the range. I think it's a pretty good time to be trading the orb right now. So if we're looking at something like this, saying, okay, Russell 2000, US 100, US 500, US 30. US 30 has my attention right away. Why? Okay, yesterday's low, traded beneath that, rejected. There was your session low, and now you go down there, and now you're looking to rotate maybe back up in to the range. So the next question becomes, where do we enter the market? The first candle close outside of our orb is going to get us into the market. If it closes above the range, it's a buy. If it closes below the range, it's a sell. So this is sort of interesting. We have about 3 minutes left in this bar. We're going to be looking at this US 30. If we get a bar close above this range, we're going to send them long. We're going to go ahead and buy into this market. Do I like that, fading the trend? I don't mind it. Why don't I mind it? Take a look at what we've got here. We had a hell of a fight right there at yesterday's low and this session low. A lot of action, a lot of volume. There's a chance this could be the bottom for the day. Maybe there's optimism. Maybe somebody's talking on Capitol Hill and they're going to reopen the markets, or the government. Maybe something like that. We don't know. This is an opportunity for us potentially to catch a bottom early in the day, buy back up all those overnight losses where there wasn't much volume. Now the volume's in there. Are the buyers going to dictate policy from here? Could happen. In order for us to take that trade, we have got to get the close outside of the orb. If we don't get it, we have to wait. That is the filter. It looks like we may be waiting. I was excited. Maybe we get that trade. Let's go to the US 500 right here. US 500. Different story, isn't it? We broke out beneath that low, beneath our orb, beneath that 30-minute, that opening 30-minute stanza, and now we're rotating back up into the range of that orb. Interesting. Things are starting to look a little bit bullish now. Maybe we're not going to get the big trend day down. We don't know yet. The jury's still out, right? We need a close outside of our orb. US 500 does not look like it's going to close outside of the orb. US 100, same as the US 500. Tested the waters beneath that zone, and now we're bouncing back up into our orb. US 2000, sort of flat, has traded inside of the orb. Interesting. So we've got the US 30 broke above. It looks like we may get a trade here. We may get the trade here. Is the US 30 leading the train right now? Is it sort of dragging the other indices with it? I would say that it's definitely the one that's the most bullish right now. Even though we are off, we're getting back to break even though. Okay, we have a potential opportunity here to get the trade. So what we want to do with our orders, we're looking on this US 30 potentially to buy. I'm going to go ahead and put a market order down, and we're going to go ahead and we're going to execute this trade, and we're going to show you where to put our stop losses and our profit targets potentially. It looks to me like this is going to be the only orb that we're going to have an opportunity to go with right here, and we still have to get that next 35 seconds before we can really dig in here and take a position. I think it's going to be close. I really do. I think it's going to be very close that we get this. We're right on the chalk. I would love to see it move a little bit further, but I'm not scared of taking this. If we close outside of the red, we're going to take this trade. Now, 19, 18, 17, 16, it's very close, right? Are we fighting a trend? We're fighting an overnight trend. That's before the volume was in. The volume's coming in now, and the jury's giving us a little bit different verdict. Okay, I think we're going to get it. We're going to go ahead and execute this thing, and we're going to go ahead and send them long. Okay, 1, 0. Okay, there's your next price bar. Okay, we're gone. We're in the market. Create the order. Get us in there. Okay, we're officially long here, US 30. Take profit and stop loss. The first thing I want to do is get my stop loss down. Conventional stop loss for this orb is going to be beneath that, right there. It's going to be beneath your range. Sometimes these things are clunky sometimes. Right there, you're going to be beneath your range. That's going to be your stop loss. Where does that lock us in at? It locks us in beneath the U.S. session low. Where's our profit target going to be? We've got a couple of options. I love options. What could we potentially do here? Shoot for that overnight high? That's your key level. Could we look to take that trade, saying that, all right, we're going to buy this thing back to break even? Interesting. That puts us at about a 1-to-1. That's probably the trade I would be looking to make right here. What else could we do? Extend 1-to-2, something like that. You could do that. It's up to you. For our purposes, I'm going to go right here, overnight high, somewhere right in that zone. So that's your orb trade. That's your orb trade on the US 30. Do I like it? I think it has potential. I really do. I think we could easily get back, buy back everything, and it can happen early in the session. There's no news out that's really going to shake us from an economic standpoint. Now, there's always surprise news events. Always. Let's take a look at our others. We got the US 500 here. No trade. What's fascinating is it did take a peek beneath that orb and then rotate up. That's fascinating to me. That tells me that the bidders are down here. Now, I'm not saying that the market's going to rally all day, but remember, that US 30 trade, all we needed to have happen is rotate back up to break even on the session. I think there's a very good chance of that happening right now. Okay, peak beneath our orb and retraced. This is interesting. This isn't really the same dynamic, but it shows us that the buyers were down here and they protected this in a big, big way. US 100, same basic thing. You sort of had a hammer, maybe a long-legged doji, no trade. Why? You didn't close outside of the orb. US 2000, this is interesting. This is an interesting one right here. You've got a situation where potentially you've got compression. Okay, we had a 15-minute bar that traded inside of the previous 215s. So now the US 2000 sort of loading up. So the real question is which way do these markets go? And do we have an opportunity to profit? Right now, we're starting to see some negative price action. You know, that's sort of the way it is. That's why we have stop losses. Right around break even, the US 30 is definitely the most bullish of all these indices. But right this minute, there's a little bit of selling coming in. Now, the beauty of this strategy is you can get swept out of here. You have a stop loss. One last thing I'm going to say about this, very important. These are demo dollars. Don't get carried away by the thousands here. But I will say that when you start trading your $100,000s, your $100,000 account, your $150,000, your $200,000 funded trader accounts that a lot of you are working with prop firms, this trade shouldn't scare you. 2,000, you're looking at like 2%. That shouldn't scare you. Now, of course, the drawdowns are 5,000 and 8,000, so you need to probably take this down by a factor of 10 so you don't blow your account out right away. But the numbers don't mean anything. You know, they really don't. It's just all about a percentage of your account, 1 to 3% of your total account balance. That's what I would say. That's what I would say. So right now we're getting hit. Price is rotating back down in. Now, there's a bunch of questions here, and I'm going to answer them in a second, but I got to go over this one point to really sort of answer a question that I was given yesterday. Now, what we have is a big question. Okay, Shane, you took the buy. Is that the best place to get your entry? Is that the absolute best place to enter the market? And I would say there are two ways that you can improve your entries. Number one is going to be the 50% rule. You wait for the price to go 50% against your range. Okay? Not bad. Very easy to follow. Show you how in a minute. And the second was Fibonacci retracements. Now, in this case, okay, we're getting hit. We're getting hit right now. It looks like we could easily get swept out, but we got to wait and see. Remember, your stop loss is down beneath the daily low. We'll wait and see what happens. If you're going to use the 50% rule to enter the market, you're going to be going at about 50% of your range. Okay, something like that. 50% of your range. That means once you get a candle close outside of your range and you rotate back down into your range, 50% is going to be your buy point. Now, the beauty of this is your stop loss. Your stop loss is going to stay the same. It's going to be outside of the bottom of the range. That's the 50% rule. Very simple. What does that do for you? It cuts down your backside risk, and then you have the ability to bring your take profit maybe right into here at a 1-to-1, 1-to-2, or 1-to-3. Or if you want to leave it at the overnight high, you also have that ability to ride this thing out. So if you went long right here, you're risking about half of what we risked, and all of a sudden this 1-to-1 trade becomes a 1-to-2 trade. Interesting stuff. That's the first way. That's the 50% rule. The second way is going to be Fibonacci retracements. Now, the Fibonacci retracements, these are one of those that I love Fibonacci's. Very simple, though, this type of Fibonacci. You're going to take this right here. You're going to go from the bottom of the range right to the top of that bar. So you're going to use the bottom of the top of your range, and you're going to go ahead and run that Fibonacci to the top or bottom of the first bar that closes outside of your range. Then you're going to look to enter on levels that fall within the range. In this case, you have a chance to go at 38%, which is right around 46,782. You've got 50%, 46,757, 62%, or 78%. Now, where this really gets interesting, you get to leave your stop loss beneath the range, and you get to adjust your risk versus reward wherever you want. So let's say you waited. Let's say you said, okay, Shane, listen, I've been burned so many times on these breakouts. I've had it. I'm waiting for better entries. They almost always do what this one's doing, rotate back down into the range and then make a decision later in a day. All right, 62% level. Let's say you went long there and actually got your entry. Look what you can do with your take profits. You could bring down a real tight 1-to-1. All of a sudden, you're only risking a few bucks. You aren't risking much at all. What are you risking down there? 100 points, 99 points. All you're looking for there for a 1-to-1 is just to get price to rotate back up into this area. Nothing even has to happen. Price just has to rotate around and you're going to win, right? Or you could try to say, listen, I want that swift pullback to 62%, and then I'm going to look for my overnight highs. And all of a sudden, that 1-to-2 off of that 50% rule we just showed you became, what, a 1-to-4? Something like that, risk versus reward. So I was asked in no uncertain terms yesterday, okay, Shane, which is better? Which is the best way to enter? Is it going to be waiting for a retracement, or is it going to be going in on the initial break? Well, it's trading. In trading, we give away things to try to get something back in return. Bottom line. When you give the dollar away in your pocket, you're expecting to get back $2. That's the idea. Or another dollar, right? Or $1.50, whatever. When you trade, you have to make decisions about what you want. For some people, some personalities, missing out on that breakout trade is worse. It's the worst punishment possible. It's like getting a life sentence. They sit there and they go, oh, God, I missed the breakout. It's the end of the world. I had my trade lined up and I missed it. That's some people. Other people say, well, I mean, these things only really break out straight in a straight line, 30% of the time. I don't mind waiting. I love waiting, get a good opportunity, get a good entry, and then dive into the market with a lot of confidence and less risk. That's worth it to them. Something to think about there. It's up to you. The answer to that question's up to you. It's definitely up to you. So you're going to want to do what you have to do to trade each and every day with a little bit of confidence. That's all. Right now, our US 30 trade's drawn against us. It's in our pocket right now. We're down about 124 points. All of a sudden, all that bullish sentiment that we saw over the last 30 minutes is kind of gone. It's really left town over the last 10 minutes. This is what I call being in the pocket. This is when we're taking heat. Should this make you physically ill? No. You shouldn't like it. I don't like it. I was hoping it would go right up and pay us off, but guess what happens when you hope? You lose. What makes this trade a winner? Price has to go up, hit our target, okay? What makes it a loser? It's not our stop loss getting hit. What makes it a loser is to remove your stop loss and just try to ride it out. We know that if this range doesn't work, if this trade doesn't work to the top side, we know we could be in big trouble to the downside. We are fighting the trends. Could be an interesting time to be in the markets. We don't want to be holding longs if this range doesn't work. It means that we failed. It means the buyers failed and this thing's going against you. So remember that. It's very important that you understand the psychology of these strategies. The psychology is simple. If taking this draw makes you sick, you wagered too much money. 1 to 3% any given trade. 1 to 3% any given trade. But right now we're in the pocket and we're taking heat. And things are going on right now, and you're feeling emotions, and you're going, oh, what if I lose? So what? What if you lose? You approached the market, you did the homework, you approached the market, and you took the trade that needed to be taken, according to this strategy. There's nothing wrong with that. You don't ever hang your head and go, oh, why didn't it work? Now, if you're sitting here next week or in 3 weeks and you go, man, these orbs, I lose every single time, then maybe you'd need to adjust your time frame to a 30-minute, not a 15-minute. Then we make adjustments. But if we get swept out here, everything we did here is fundamentally sound. The question is are we going to get rewarded today or tomorrow? And that's not just covering up for a trade that's in the red. I still think it's got a great shot to win. I'm actually seeing a lot of really good signs. What I don't like is the way that we're down right now a few bucks, and we are vulnerable to a big sweep. A big sweep comes in and knocks out today's lows. We could be in trouble there. All right. I've sort of gone over the psychology of what we need to do to set these trades up. I've also looked at what exactly has to happen for us to be successful. And we talked about the emotions that you're going to have when you're in this trade. Right now, you could be pulling your hair out. You might not feel very good at all. See what happens. Okay, I've got a ton of messages over here, and I'm way behind. Let's see. All right, SV, the NAS is super volatile. I won't trade it. Me neither. Scares me. I've taken trades in the NASDAQ, the E-mini NASDAQ. A lot of people on YouTube, that's all they do. Oh, look at this move, look at that move. I go, yeah, I've been on the wrong side of a couple of those. Been on the right side, been on the wrong side, though. The NAS is crazy. Steve Francis, do you ever move your stop loss to break even? In this type of strategy? No. No. On a breakout like this, if price really breaks in our favor here, somewhere up in here, you can definitely move it to break even. I don't recommend giving the money back, but honestly, if it's a late day break, and let's say we break, we've got, I don't know, a couple hours left, or let's say we get a real sweet break up into here somewhere. All the teachers out there, all the mentors, all the strategy people, all the books tell you not to take the profits there. I'm a big fan of making money. I'm going to take the profits. I guess what I'm saying, Steve, is it's a fantastic question. I think that a person can design their strategy to move to break even. Just be sure that you quantify the results and say, am I getting stopped out at break even a lot? What's happening here? How far does the market really have to go for me to be comfortable at not getting stopped out before we miss the move, the big move up? You know what I mean? So, and then the other thing I would say about break even is it's okay. You just have to be consistent. For me right here, we've already thrown the trade down and we've accepted the risk. We're sort of in it to win it, I would say. And I see I have to tell you that we are fighting a trend, but I see some big potential. If this market flips into the positive, I could easily see us going home positive on the session. And that really is all that has to happen. You're only down 100 points. Yeah, you had a negative day yesterday, but it's not the end of the world. A lot of people out there are running for the hills, and there's some reasons to do that, but I don't know that it happens today. Perfect world, you'd love to see this go up and get paid off in the next 30 minutes or so. That's exactly what I would be looking for if I had my $2,000 on the line. I would feel, you're basically at break even right now. We're down a few pips. It's not the end of the world. What I'd like to see is a little bit of a rally, and typically you get rallies around the half-hour marks. So something to think about here. Good idea. Let's see. It's the best market to trade, but I'm shy. No, the NASDAQ's trouble. Let me see. Paca, do you use trailing stops? I do not, but you're more than welcome to. What I would recommend on a trailing stop, though, is if you're going to use a trailing stop, shoot for some money. Shoot for a big payoff. That way that at least if you get in on that big runner that we're looking for, then that trailing stop typically is going to stop you out when you've made a little bit of money. I don't, though. I haven't been able to rationalize the trailing stop in my mind. I always feel I've traded with them, but I always feel like, well, I'm getting stopped out a lot of times. My approach, I gravitated away from trailing stops and break evens, and I just try to read price action and what's happening. Now, we don't know what's going to happen next. I have no idea if this market's going up or down, but I do know that we have a damn good entry to the top side. I do know that. Why? Our key levels are there. Our range, it really set up beautifully right around our key levels. If we get swept out to the bottom, we do. That's life. But I could see a situation here where we start moving to the top side and it starts happening rapidly. I can see that. So let's just wait and see how it pans out. Bitcoin's acting the same around the US 30. Yeah, we'll take a look at Bitcoin here in a second, Ahmed. I look for both up and down like the same. Shane, I know it's a way of today's trades, but do you think Japanese 225 is a promising correction? We'll go ahead and we'll take a look at a few key markets here in a minute. We are going to have some time. It looks like I want to see this trade develop a little bit more live before we sign off here today. Let me see. Tina, do you draw the range in one time frame and then drop down to a lower time frame? No, Tina, when you let's put it this way. When you draw your range, it is for that range and that range only. So if we're going to use a 15-minute, that's my time frame. I should have wrote that down, decide on your time frame, but we were already just doing 15 minutes. That's a big part of your process. What market am I going to trade? What time frame am I going to trade? Now, I believe we were going back and forth yesterday on the private chat, and the idea was, I was very, very candid about my favorite was the 30 minutes. The 30-minute chart is my favorite. It keeps you out of a lot of the noise that we're being faced with right now. On a 30-minute time frame, we're not looking to get into the market unless we break above that level right there. Now, I'm not saying either's wrong or right. The 15 minutes more aggressive, and that's what we want to do today. We want to be aggressive. So to answer your question, I wouldn't – your orb, your range is for that time frame and that time frame only. If you're going to be trading U.S. equities like we're doing today, 15-minute and 30-minute could be pretty good. 15-minute and 30-minute could be pretty good. So we're watching this closely. Let's check out our other markets. Chop City. So let's say we were going to use this US 500. Let's go to a 30-minute orb, 30-minute chart. There it is. Still bearish. There's your first. There's your second. You got two bars. They're sort of bearish. You got a doji setting up. You're sort of trickling, though. I mean, it's not encouraging. We haven't broken to the top side by any stretch. Does it feel like this market's going to turn right now? Or is this sort of the last stand before the bidders just get the hell out of the way and this market breaks against us? We don't know. We don't know what price is going to do next. All we can do is align our interests with our money, have a strategy, and go for it. That's all we can do. Shane, do you think it's going to turn? Jury's still out. You'd probably have to ask me in another 15 or 30 minutes. We're only an hour into the session. So you got A periods the first 30 minutes, C periods the second, or excuse me, A period, B periods the second, C periods the third. I would have to see C period before I could make a real serious judgment. But right now, I feel pretty good about it. I like our odds. That's just me. US 100, what happened? Nothing. Junk City, same thing. Nothing's happened yet. US 100's coming off, though, isn't it? Is the US 100 a leading indicator? No, it is not. Why is tech taking it on the chin right now? Earnings reports, but also a lot of people are worried about the AI situation. Interesting. 30-minute orb. Is that worth taking a short down here? Potentially. If you want to get it on the big money, go. But here's the real story in tech. Weekly chart. You're off almost 4% on the week, and it doesn't look good. Personally, I'd rather buy in down here somewhere. 25-ish. Or 24.5. 24.5 and a quarter. Beautiful thing. That could be very, very good to us. That's just the way I see big tech, but that's not an orb trade, so don't tell anybody. US 2000, interesting. This is interesting to me. Two bars, compression. I love compression. That's almost like a little diamond right there. It's almost a little diamond pattern. What are diamonds? Typically like a pennant, like a breakout. I don't know. We got a diamond. We don't need to draw a diamond, but it's pretty close to one. This is interesting. Does the market go down or up? Or US 30? We're struggling. We haven't been able to really secure that market share to the top side. I want to see this thing break up in here, and then we can start making decisions for what we're going to do later in the day, what we're going to have for lunch, where we're going to go to dinner, maybe what game we're going to go to over the weekend. I'm just kidding. You guys got to remember to have fun when you trade. I see so many people they got their hats on sideways and they're chewing tobacco and they're miserable in front of the screen. Have fun with it. Really, if you're having fun, you're doing pretty well. All right. Yeah, okay, so we got some questions here. We want to look at the Nikkei, and then also we want to look at Bitcoin. I'm going to do both of those. Probably right now is a good time to do that. We have another question, though. Let's see. Nico, what is your advice for somebody who cannot stick to their strategy? I'm asking for a friend. Hi, Nico. I'm Nico, and I can't stick to my strategy. That's cool. Hey, listen, I've been there. I question my strategies every time I lose. I'm not like one. Listen, a lot of these folks on YouTube, I follow a young lady that does trend lines, and I won't mention her name. She's extremely popular, but I watch it for some of the content, and I love the presentation because it's like, well, this one was a loser, so what? Well, this one was a loser. Well, it didn't work. Every time I lose, I say, what's going on? Why did I lose? Why? So as far as a strategy goes, typically, if you pick one that is good for your own personality, you're going to have a great chance to stick with it. And as long as you build your risk versus rewards the way that you need to and not do over leveraging or chasing trades or do anything really stupid, you're going to be fine. And you're going to find that over time, if you actually build an affinity for the strategy, meaning if you actually like your strategy, you're going to want to work on your strategy. I call it your game. If you like your game, you're going to want to work on it. You know, I mean, it's funny, you watch a lot of, and this is sort of off the topic, but it really is the same mindset. You see all these folks online, you know, that are fitness influencers, and they're all lifting weights, and they're huge, and they're in great shape. And believe me, health is important, and all that's great. But you always wonder, well, did you start becoming an influencer and then you built yourself into that body, or did you start with that body and then you said, oh, I want to go lift weights? You know what I mean? Did you go to the gym because you needed to get work on your fitness, or did you start going to the gym because you were already fit and better than everybody else there, right? I always wonder if it's the chicken or the egg. Well, your strategy is the same way. Do you stick with your strategy because you like it? You know, do you have game? Do you have game? Can you make money? Anybody can sit here and trade technicals if they're making money and stick with it forever and ever. Anybody in the world can do that. When you start losing a little bit, do you like your strategy enough to say, okay, I'm going to work on this and I'm going to find out why I'm losing? Why am I losing? Am I not following the strategy perfectly? If that's the case, then that's on you. That's your fault. Is the strategy working well? Maybe it's not working. I can tell you with this opening range breakout stuff, if you get into a situation where you are in flat markets, you're going to get chopped up a lot. You will. And that's when the longer time frames come into play, and that's where all those other nuanced ideas come into play. So what I would say, Nico, if you can't stick with a strategy, find one that works. That's it. When I first was taught, you know, back in the old days, when I was taught to trade, I was given a set of proprietary indicators, and that's what we used. And I was told, take this strategy, put it on the Euro FX futures, and make it profitable. And I remember looking at the strategy, and it was a very elegant. I mean, I was in no position to question how good the strategy was. I didn't know anything. But I knew after a few years of looking at this, I was like, man, I just don't really like it. I like Fibonacci's, and I like getting my macro levels and waiting for trades that I really believe in, as opposed to trading 5-minute charts trying to scalp off of really what I figured was a very, not an esoteric, but definitely an abstract idea. Basically, these indicators would come up and they were based on really obscure algorithms. You couldn't see them. Like, you'd look at your chart, and all an algorithm really is a pattern, but you look at it and you say, well, I can't even see where these indicators are. What is this? Well, you know, it's this trade. Here's how you should execute it. And the idea was that the computer was smarter than I was, and that's fine. They are. AI is brilliant. You've seen it. But I didn't understand the strategy. I didn't even really know what it was. And if I didn't know what it was really hard for me to stick to the rules and stick with it. Like right now, we're starting to get destroyed on this US 30 trade. I'm watching it. Do I like it? No. But do I understand what's happening? Yeah. The buyers are getting knocked out of the box, and we potentially may be looking at a big time trend day down. So if we lose, we lose. But with the strategy I was taught, I didn't understand why I was losing. I would sit there, I would take a trade, and I'd say, okay, you know, I've got a purple white buy signal. I better buy it. So then I buy it, right? And then the thing loses. And I'm sitting there going, man, that was like an 80% signal. And we lost. And I couldn't figure out why we lost. You know, and if it was a buy and we lost, that meant more sellers came in and nailed us. And then I'm sitting there, and the beauty of this was that then you sit down and you look at your trade log, and then you explain the results at the end of the day and say, why'd you lose that trade? And I'd say it was a white blue, or it was a white purple buy. I followed the rules. I bought it and it lost. Yeah, but why'd you lose? I had no idea why I lost. With these Fibonacci's and the things that I do, and this ORB strategy, I know exactly why I'm going to lose. I mean, when I lose, I know it. The market just didn't react, or the market became illiquid, or there was a news item. Like right now, I'm curious, is there a press conference at the White House? What's going on right now? That's what I'm thinking in my mind. I want to know why this isn't working. And the answer is we're fighting a trend from yesterday. There's more sellers than buyers. But why? Market sentiment sort of turning negative a little bit. Interesting. It's all fascinating stuff, guys. And as soon as you get to that level with your trading, you're going to find that it's easy to stick with a strategy. It's a great question, Nico. It really is a great one. That's my opinion on it. Let me see. Tina, yeah, I heard that theory. Find a strategy that suits your personality. Absolutely, Tina. If you don't do anything else, understand your strategy. Your strategy needs to be intuitive. There can't be any conflict in you. You can't look at your strategy and say, okay, it's telling me to buy, but God, I want to sell. If that's the problem, it's hard to make it work. It's hard to make it work. All right, let me see a Sunday Frank. Good to see a Sunday, new name. All right, thanks for joining us. Sorry to ask, but how do you trade the orb? Yeah, just rewatch the stream. Just rewatch the stream just from the beginning. I lay it all out for you in pretty good detail. So I appreciate the question, though. Thanks. It's okay if you join late. As far as what we're doing right this minute, we're getting beaten up pretty good. We're taking some damage here on this US 30 trade. Let's go ahead and take a look. This trade's rotating back down into our orb range, and I'm telling you what, it's not looking good. We still have some chances to catch some bids right around our key levels. Right now, I'm not really pleased that yesterday's low didn't hold. I mean, it probably shouldn't have held because it's saturated, but still, now we're moving beneath that low, and that tells me that we're probably going to test the overnight low next. And if that doesn't work, we're going to get blown out of here. So we had a pretty good trade going for a minute. Right now, it's definitely rotating against us. 30-minute chart keeps us out of this drama, but once again, we're trading 15ths today. US 500, now you're starting to see the market across all the equities open up to the downside. You could definitely take a trade here if you get a close beneath this range on the US 500. I love the 30-minute. This is probably where the rubber really hits the road and you see a major move. That could be it. US 100, now you're starting to see a deeper pullback on that US 100. Let's go back down to that 15-minute orb. And there it is. 1, 2. So your orb there. That's actually, we got it drawn for a 30. Bar 1, bar 2. Now you're starting to look at selling this NASDAQ. We can line that one up in real time too if we want. I don't really want them conflicting, but it doesn't really matter. This is instructional, I suppose. So right there, this would be your 15-minute trade if you get the close there. Russell 2000. Still inside of that range. Hasn't moved yet. The sellers are coming in, though. We could definitely get knocked out on that US 30. So US 100 looks to me like it's going to be a sell. So what are we going to do? We're going to go ahead and sell this thing. We're going to sell at the market, and then we'll go ahead and line up the trade. You do have a couple of options on your stop-loss locations. As far as, where I think they should be, definitely above or below your range. Definitely. A lot of folks, though, especially if the signal bar is big, like right here, you could potentially put your stop loss right there. We'll execute it live right here. Looks like we're going to get wiped out there on that Dow. We're going to make new lows, it looks like. All right, the sellers are in complete control now at about 8:45, so we've been going for about an hour, 15 minutes. 6, 5, 4, 3, 2, 1. Okay, there's your sell. See if we get filled or not. Okay, there's your sell. Stop loss. You've got options. If you want a real tight scalp there, you could put it right there and just take your profit target down in here somewhere, make it a 1-to-1. You could do that. It's high risk. I think it's high risk. I think you could definitely retrace, something like that. Personally, I would be looking at my stop loss right up there, right above your orb. Essentially, that's going to be your opening range high, something like this. And then you're going to go ahead and take this down for at least a 1-to-1. Now, this is actually a very good instructional sort of a thing. So you're saying, Shane, okay, what if I want to go for your next key level? You don't have any more key levels to the bear. I'd say that's a great point. What do you have to do? We're already way beneath yesterday's low. We're beneath the session low in a big, big way. What can we do here for a key level? Well, there's a couple of ways you can do it. That's your weekly chart. That's last week's low. Or 2 weeks ago. Something like that. How about there? It's October's low right there. If you're on the short side of this, it looks like you're going to be correct. Market's coming our way now. If you want to use a static risk versus reward, you could. You could have a key level all the way down there thinking you're going to get a major sell-off to 23.9. Could you see 23.9s today? It's not likely, but it's possible. Could happen. How about that level right there? Is that it? Is that significant? Not really. So in this case, we don't really have any highs or lows to shoot for. Probably just line up that one-to-one trade and go with it if you wanted to take this trade, which is, you know, highly questionable. So there you go. That would be your sell. All right, and there's your US 30. We're definitely bleeding there. All right, guys, we got a lot of questions for markets. My own opinion, I'm more than happy to do just that. Let's go ahead. No, I don't want that. Let's go ahead and pull up a let's go ahead and pull this one up. Got a lot of templates these days. All right, we got some questions. No worry, Callies. No worry. All right. No worry, Frank. Okay, we got a few markets. We had a few that were asked. We wanted to look at Bitcoin. We also wanted to look at the Nikkei 225, and now we want to look at the Euro USD, Bren. Just saw it bounce to the 61% off the daily. I love 61%, Bren. All right, let's go ahead and get this going. Let's go to Bitcoin. Bitcoin's sort of in a state of flux, no question about it. We've sort of been spot on with a few of our levels here. We talked a lot about 100,000 in Bitcoin, a lot about it. Doesn't get really, as far as a big round number, it doesn't really get any bigger or rounder. It just doesn't, right? So what do you have? Compression right around 100,000. We bounced right off, I mean right off of our moving average, which was down there at 98,708. What's the low here? 98,898. I mean, that's right off your 13-month EMA. Huge level. I'm still bullish. Look at your daily. 50% right off your daily. This has been pretty good scalping right off of this zone, and it's not so much that it's the monthly 50% level, but it's the 100,000 level. So if you are trading Bitcoin, there's a couple of things that you need to be aware of. That's compression. If you break beneath that level, you're going low. 62% is right down here. We talked about that as being a great entry point, maybe 95,000, something like that. Yeah, could happen. That's a great place to scalp. If you do get established beneath 100,000, that's probably where this market's going. It's going there fast. So that's what I would say on Bitcoin. You know, it's definitely one that we're watching closely. No question about it. Let's see, Japan 225. I've always been a big fan of the Nikkei. Big fan of the Nikkei. All right, so step back to your weekly. I believe we hit the weekly earlier this week. So what do you have? Big pullback, yeah? Is it a coincidence that big tech and the Nikkei are pulling back? I don't know, maybe. Crypto, the Nikkei, and big tech, US 100, they're all taking it on the chin. The dollar's not really doing anything. It's fallen a little bit today. Hard bounce right off of that 38% on the weekly. That's the level, 49.5-ish. I mean, that's the level in the Nikkei. I would really be a fan of that. There's your sort of last time we tested it. Big time spike. Really an amazing test. A lot of bidders there. And you can see volume picked up the next day. And now we're coming back down here, right? So now we're in a situation where potentially we could run into our Bollinger midpoint, which is on the daily, and hit our key level. I'd probably be a net bidder from 49.5, somewhere in that zone. That's a pretty good resistance zone. If that level gives way, then we're going lower. A lot like that Bitcoin chart, so that definitely is going to be the key. If you're holding shorts right now, you're probably doing all right, something like that. Euro USD, let's go ahead and hit that. Let's see. Just bounced off the 61% on the daily. That was crisp. Did you get that one, Bren? Look at that. 115.92-ish, right around 116. Went up, spiked, pull back. What exactly? How many points did you get? Oh, yeah. That's a beautiful intraday scalp. There's your high right there. It was somewhere right around 89. Your low there was right around 78. So is this the top or the bottom of the market? We don't know. We could easily press higher. We could easily press lower. I mean, it's really hard to say at this juncture. What I would say is that's definitely a big-time zone. So am I a net seller today from like just beneath 116? Yeah, more than likely. early next week, though, what's it going to look like? Well, I mean, your weekly high is probably going to be right in here somewhere. So, yeah, today's high is going to be the weekly high. That's going to be what everybody's wondering. Are you going to trade above 116 or not? With no real economic data to go off of, it's anybody's guess what's going to drive this market. But could we rotate back down to the downside? Could this be an intermediate term top? Absolutely. Absolutely. 100%. Absolutely. So I love that trade. I mean, that's a fantastic trade right there. Good observation. I would be short until proven otherwise. Once 115.92 is gone, 116-ish is gone, then yeah, you could say, okay, then the next port of call is going to be 116 and a quarter. You'll notice this is a tight wave, though. I mean, that's only 25 points, or 34 points. So what you do is you don't lose the ranch if this doesn't work. It still has a very good chance of coming probably back down here to 69-ish, which is a pretty darn good scalp, 20 pips at least. So that's a nice 20 pip scalp. But up here, I mean, this is another really fine short, right up around 20. This wave's definitely being challenged. The long-term trend is down, something like this. Interesting. Great scalp, though, if you were looking for, 10 to 15 to 20 pips. That was a banger there. That was a real nice trade. Let me see. You're still in it, though? So, yeah, absolutely. So you're looking at 112.75 swing trade. Just curious, to the monthly 62. Okay, so you're going to be in this one a while. All right, I gotcha. So your monthly. I mean, I love the ambition. I like it. I mean, could you get it? Yeah, you could get it. Is it going to happen? I have no idea. There's so much going on with our news. Government shutdown is really starting to be a drag on everything. Sentiment's sort of turning negative. What happens to the dollar? Do we get a rally out of the dollar? I don't know. Interesting trade, though. That's a good spot. I really like the 62% scalp for me is everything. I mean, that's fantastic. It's a great trade. All right, let's see. Ahmed, we tested it several times, Shane, 100,000. Yeah, that's all right, 38%, Brent. I got what you said, absolutely. Let's see, we tested it several times. Yeah, I mean, when 100,000 goes, Ahmed, watch out in Bitcoin. Watch out. I mean, it really will. It'll plunge to 95, and I'm not supposed to speak in certainties, but when you see compression like that around one of those levels and it actually does break, look out. Let me see. I am Blue. Good to see you, I am Blue. Welcome. Hey, Shane, Universal. Good to see you, Universal. All right, guys. Well, let's go through and recap what is happening right now. Well, I mean, we're getting hit. It's not over yet, though. That's why we have stop losses, right? We are closing in on our stop. I would say that this will be the last stand. If the session low, the overnight low doesn't hold, if you don't get that type of action right in here, then you're more than likely going to get stopped out. And that's okay. That's sort of the way these things work. That's why you always got to have risk management, really. If you don't learn anything else, risk management. US 100, this short trade right here, I mean, theoretically, it's a pretty good one. If the market doesn't bounce up in your face, and it certainly could. It's Friday. So this trade right here, this trade right here, session low. This zone needs to hold up. Needs to start rotating back to the bull to give us a chance to win. But we've burnt we burnt about half of our powder. We're about halfway to our stop loss, so it's not going well. We definitely didn't get a breakout up here. Could we get rotation back up to break even? Potentially. One more thing I'm going to cover on this orb, and it's a psychological thing. Gordon Williams, good to see you. The last psychological thing I'm going to say. The question really becomes right now. Okay, you're down 1,000 on this trade. About 50% of our risk is gone. Okay, that's not good. Odds are we're going to get hit. Now let's say price rebounds. Let's say that our trade, it wasn't really a good one. But let's say later in the day, we come back up here to break even. What do we do then? Let's say you've got about an hour left in the session, 2 hours left in the session, and you get back to break even after taking this massive draw. What do we do then? you got options. You could hold it into the next session and make it a swing trade. Just saying, well, I think I picked the bottom. Maybe we're going to rotate back up against today's low and have an opportunity maybe to make some money on it. You can do that. Just remember, you need more margin money to cover those overnight fees. You've got to do that. The second thing you got to do is say, maybe this trade's going to be a loser, though. Maybe it could lose. I just took a big draw. I have a chance to get out at break even. Do I do it? I'd say going into a weekend, yeah. I think that if this trade late in the day gave you a chance to get out of it at break even and not lose your money, I think you take it and you move on to the next one. But these are the nuanced things. There's a million questions that surround each one of these trades. The biggest thing I would say is be consistent. That goes back to liking your strategy and your strategy being intuitive. It's very important that you understand the difference between just throwing darts at a board and actually having an approach. That's when, if you have an approach and a strategy, when things don't go well, you don't go jump off a building because, oh, the world's against me, the universe. No, it's not. Hey, we set up a trade. We went after it. It's not looking good right now, but things could change. I've seen things change. Bottom line is you're in control. And when you're in control, you have a chance. When you're out of control, you don't have a chance. Then you get into what I call the deep end of the pool. When you get into the deep end of the pool, you're out of control. You're doing things that are emotional. You're doing things that are stupid. And you don't want to do that. You always want to be in control. In control. Are we in control right now? Yeah. We don't like the way that it's going, but we're in control. Something to think about there. All right. T Marina. Hi, Shane. When you look for setups, what checklist do you follow? Do you have a specific strategy in mind starting off? Do you look at each instrument one by one? Yeah, I do. For me, it's all about the way the market looks go within the prism of fractal geometry and Fibonacci's. So the first thing I'm looking for is moves. But I also have target markets. So I'm going to be looking at the S&P 500. I'm going to be looking at WTI crude oil. I'm going to be looking at gold futures, the Euro FX futures. I'm looking at that, which is essentially the Euro USD. And out of those markets, I'm looking for the one that's on the move, the one that's established a range. And then I go through and I put my Fibonacci's on, and I can easily identify the best trades potentially for the day and for the week and for the month. And a lot of the trade ideas that I put out, those are based on the best trades for the weeks and the months. That way you guys have the levels you can look at and see how the market really plays them. That's what I do. So I would say the first step in that is, okay, identify my markets. What are they? I already know them. Crude oil and gold are my specialties. Euro FX, love trading currencies too. It's a lot of fun. And then the equities, I like exposure to the equities as well. I find the US 500, the E-mini S&P 500, that's typically my bread and butter. That's the best index that I like to follow. As far as what I look for then, I know immediately. I said, well, what's moving? Some days the US 500 doesn't do anything. And you're like, okay, well, I'm not trading that. Is crude oil moving? Crude oil was really slow. Gold was really slow over the summer. So we didn't really have any ranges to go with. They weren't regular. So you're looking at things like currencies to do some things. So that's the first thing I do is my markets. Second thing is what's on the move. Third thing is where's my levels at. And I have some range levels that are proprietary that I don't share because I'll get sued. but I have some range levels, and I have some ideas on what the market structure is. Meaning, is it trending? Is it not trending? It's very simple for me, T. I have my range numbers, and I know that if a market's flat and it's not trending, I'm going right to my range numbers, which essentially is the market goes here, and then I'm just going to sell against the pressure. The market goes here, I'm going to buy against the pressure. So if a market's flat and it's not trending, I'm going to go ahead and I'm going to play my ranges, which is reversion to the mean back to the center. That's the first thing. The second thing, if it's trending and moving and I have a fractal, a range I can work with, a wave, a pricing wave, then I'm going to go ahead and use my Fibonacci's and dive in. But I always know where my long-term Fibonacci's are, monthly, weekly, dailies, all that's on my chart to begin with, and then I put my ranges down, and then I figure out what the market's doing and make the trades from there. The idea is to always take what the market gives you and don't try to force a round peg into a square hole. If you're trading ranges while these things are trending, you're going to lose. If you're trading trends while the market is ranging, you're going to lose. It's just the way it is. If you can figure out market state, you can win. So I hope that helps a little bit, T. That's my mindset. That's what I like to do. Let's see. Is the Dow Jones trade real money? No, it is not universal. We had a meeting of the minds with the back office, and they don't want me to trade real money. I was There was a while there last summer I was trading real money with my Ninja Trader setup, and they said we don't need you trading real money. Just everything's theoretical. Everything you see here is theoretical and for instructional purposes only. That's the line. Not investment advice. It's in the disclaimer. So no, it's not real money. Let me see. SP, is the first 15-minute high or low? Let me see. Is the first 15-minute the high and the low, or the two 15-minute candles? It's both candles, SP. So if you're going to do that, if you're going to build an orb, we're going to get stopped out here. I can't believe that. That's fantastic. There's the short starting to rotate back up against. So if you're looking at a 15-minute 2-bar orb, right there would be your first 15 minutes, SP. There's your first 15 minutes. There's your second 15. Now, sometimes the second 15 will trade inside of the first 15. If that's the case, then your range is just going to be your first 15-minute bars high and low. That's all. It's just the first 2 bars range. The highs and the lows of the first 2. That's it. And feel free. I went over all of it at the beginning of the stream if you need to go back. We've been on for over an hour. So there you go. All right. Well, unfortunately, it looks like we're not dead yet. We're not dead yet on that Dow trade, but it doesn't look good. It looks like we're going to get stopped. Not good. Anytime you're down to about your last quarter of your risk, pretty much always goes against you. That's okay, though. We put it down. We'll live with it. Bryn 98. Damn, I love it when levels work on the dot. It makes up for not getting filled last week. Absolutely. Absolutely. Euro USD coming off 115.73. That initial storm that sort of developed up there right around 115.92 is working. That could be an intermediate term top. It really could be. Oh, yeah, we got to go over natural gas, too. I almost forgot. I got to stop looking at this US 30 chart. It's starting to bother me. It's having an impact, as they say. All right. Let's go ahead and look at this one. We'll have some good news. 920 EMA. If you guys aren't familiar with the 920 EMA strategy, it's one of those that we work. And it's there's the coded 920. Once it loads up, I got 50 charts open, so there you have it. We're going to get stopped out of that thing. Look at that. There's our sell. Selling during the overnight on the 921, that US 30 trade. Let's go ahead and look at that natural gas daily, though. I had this broken down pretty well. And there it is. This is one that we covered on the weekly newsletter, Switch Markets Weekly newsletter. And there was the buy. So there's your bid, bullish crossover right there. The 9 crosses over the 20 on natural gas. Sort of stagnated for about a week, and then, yeah, baby, went right up to June's high. We made a new yearly high. We checked above June's high. So that trade right there was worth a lot. That was worth a lot. And when you see the different time frames, you see what we have to deal with on short time frames with that orb trade that we just did. And we want to build these in short time frames so we can limit our risk. But believe me, when the big money gets involved and the players that really make the millions of dollars in these markets, that's the type of trade they make. The type of trade that Bryn's talking about, taking a position short from right underneath 116 and looking to ride that down to maybe 112, somewhere in that zone. Your success rate really doesn't have to be that high when you're taking that kind of money. Those are huge trades. And when you talk about institutional traders, a lot of traders, a lot of folks talk about them all day long, the institutional footprints, the traders. Where's the money at? Well, the institutions are exposed. They're in the markets. But they're talking about seasonality, seasonal trades. You guys have heard me say that a million times about crude oil. There's folks that are lined up short from $60 crude right now, big, thinking the same thing's going to happen, just the opposite in that natural gas trade. The gas trade was fantastic. It was a banger to the top side. It was a beautiful thing. What we're having on our orb, the risk here is going to be a much, much lower, but we're going to lose. So just remember that. When those institutions, a lot of people that are telling you about the ICT concepts and the footprints and all that stuff, just remember that institutions, they don't even really look at charts. They understand seasonality, and they have the money to play macro trends, and that really is what trading's all about. When you want to get to that private jet level and the Ferrari level, that's what it's all about. It's difficult to trade intraday strategies and get there. You can make money. You can make a living trading intraday, but that big money, that real big money, those are seasonal trades. Those millionaires, billionaires, guys that run funds, they'll go years without losing. They'll just play seasonality until it bucks them, and then they come back, regroup, and go. I want to stay on for a little bit longer because we're going to get stopped out right here, it looks like, on the Dow. Dow's coming off big. So this is a situation that's just you don't want to be involved in. We've had some opportunities maybe to get out of this thing, but we don't want to really cut our losses until our stops hit, and then we take our loss and we go home. It's starting to look like it's going to run to it, though. Who knows? Maybe we base out down here. I doubt it. I need a magic 8-ball. Signs point to no. That's for sure. All right, guys, I'm going to go ahead and sign off, but the US 30 trade's not looking good. The US 100 to the downside, that might be the big winner today. Clearly, you always want to run with trends, but we had a real good setup there. I liked it. Key levels were in play, nice compression, got some good price action at the beginning. Who knows? Maybe this thing will stagnate and go our way, but I doubt it. I doubt it. Usually, when these things go against you like this, you're a dead duck. So sometimes you just turn the page, go do something else, look at another trader, go get a cup of coffee or eat some breakfast, right? Okay, let me see. Ahmed. Okay, or Universal. I'm glad that's helpful, Team Marina. Indeed, very helpful. Absolutely, you're welcome. Universal, I love the transparency. That's the key I am with how to trade. Well, we always love to have you guys. Let's see. Ahmed, you're always unique and different than most of the traders. Thanks for the helpful info. Absolutely, Ahmed. You're welcome. Just remember, if you work hard enough at anything, you can make it work. You know, you guys see the big washout rates, 95%, 97%, all lose. Well, a lot of folks come in and they don't, have the aptitude to do it. They don't have the curiosity. They don't have the desire, and they're undercapitalized. And all those things factor into somebody walking away from the markets. And what you have to say at the end of the day is, do you want to be in the market? And what are you going to need to do to get there? And it's not necessarily going to be an easy journey. You might have some success right away, and then you might go through a long period of no success. This week, we've traded live a few times. It hasn't gone well. The one natural gas winner, though, that's sort of that makes up for it. That's a position winner. But the rest of these things, we've had a few pretty good scalps in the trade ideas, but the live trading on live stream hasn't gone that well. This right here is a loser. Risk off going into the weekend. I can tell you once that range breaks, we might be going a lot lower. So I wouldn't even be involved to the long once that's gone. But that's the idea, guys. You just got to stick with it and really enjoy it. And if you enjoy it and you enjoy your strategy and everything makes sense to you, what you're trying to do, remember, you can trade any way that you want. Just be disciplined, risk management. Make sure that your strategy makes sense to you. If you like crossovers, trade them. If you like opening range breakouts, trade them. It's up to you. It really is truly up to you. And just stick with it. I'll be around. If you won't need anything, head on over to How to Trade and go ahead and send me a private message, and I'll get back to you. So I'm confident I answered everybody's questions today. You guys have a fantastic weekend and a trading day. I may do a news brief a little bit later on. There's some news out that we probably need to cover, but maybe it'll wait. Oh, yeah, one last scheduling note. I'm going to be off next week. I'm going to be out on vacation, so if you need anything, it's going to have to wait. Take a few days off. But you guys be sure to check out some of those videos that are out there, all of our YouTube channels, and then also over at howtotrade.com. We got a trading academy in there with a lot of material. So feel free to consume at your own leisure. And the US 30 trying to make a last stand at 46.9. It's not going to work. Or 46.690. It's not going to work, in my opinion. All right, guys, I'm out. Have a fantastic trading day. Remember, watch your risk. Be careful. Caution's the better part of valor. And trade the action well. And we'll talk soon. See you.